Harprem, welcome to Rising Giants. It's great to have you on the podcast today. We'd like to start by talking a little bit about your early years and some of the defining moments that set the foundation for becoming a
Hello.
startup founder. So if you could run through some of those.
Yeah, sorry. Believe it or not, as soon as you said welcome to the podcast, you sort of froze there, and then I didn't hear a thing you said after that.
Uh, okay, let me go again. Harprem, welcome to Rising Giants today. It's great to have you on the show. We'd like to start by just talking about some of the defining moments in your early years that set the foundation for you becoming a founder.
Okay, great. First company I started was in 2012, straight out of my MBA program, and that was almost by chance. I wanted to get into the startup world, so I started joining these programs called Startup Weekends. They were really big back then, and this was like probably the second startup weekend in Thailand ever. Went in without knowing anybody, without ever speaking to anyone there before, not knowing anyone in the industry at all. Met a bunch of random people at an icebreaker event that they had before that. Just got together with them and say, hey, let's start something together. You're good at this, you're good at this. We need to make a team for this program we're in anyways. Would you like to be in our team? Like, okay, great. We pitched, came second place at the event, and 2 weeks later, one of the judges said, we actually really liked your idea at the event. Would you like to work on it together? I'll give you $50,000 for 50% of the company. And you have to understand the concept and mindset was like, we spent 3 days working on a PowerPoint presentation for a startup weekend event. I've never met these people in my life before, and it was just based on something that really happened really really quickly off the just by chance. When we got offered $50,000 for 50% by a reputable VC, by the way, back then in Southeast Asia, Ardent Capital, and they had founded companies like Ensogo. They had founded companies like AdMax and exited a couple of companies before as well. So these guys had a track record. I knew of the companies that they had founded, and when they offered that money to me, for me it was like, great, I'll take it. And that's how my entrepreneurial journey really, really began. And from there, it just kept rolling and snowballing into where I am now. Yeah.
Great. And if maybe for the audience, so Dom and I, we're also a little bit new to like the whole the Thailand startup ecosystem. So it'd be great if you could just set the framing for like what it was like being a startup founder, 10 plus years ago in Thailand, and how has it shifted as the years have gone on?
10 plus years ago, you could literally count the number of founders there were in the industry. In every When I say industry, I mean the startup industry. Forget about any specific e-commerce or insurtech or fintech. No, none of that existed. It was just startups, and the people who were doing startups could fit in a small room, and everyone was there at that startup weekend, so to speak. And all of these guys were very supportive of each other, very helpful of each other. Any young person who had an idea or any friend or colleague, all wanted to, it had to get into this sort of micro society, so to speak, in order to get it to make it somewhere. VCs were non-existent. Singaporean VCs never even bothered looking at Thailand at that time. Thai CVCs didn't exist. The only VCs that were really here in Southeast in Thailand at that time were, I would call them, more incubators than VCs. You had a lot of foreign companies setting up startups and setting up businesses in Thailand as the base because resources were cheap. So these are all, German, Dutch, American, Italian guys coming into Thailand, setting up businesses here and running them, but not really as a startup as well. A lot of them just ran it as SMEs and sort of got labeled as a startup later on. So it was a wild west. Regulations were non-existent for a lot of technology-based companies. No tax benefits, no visa waivers. It was a wild west. That's the context of how I started. Early days, I think there were just two or three companies that were really big in Southeast Asia. In Thailand at that time, that would be the Rocket Internet Group. They were doing Lazada. They were doing Easy Taxi, and they were doing everything that they were already, companies were already doing in the US, and they were just copying that model in Southeast Asia. Uber was still around back then in Southeast Asia as well. Grab didn't exist yet when I started, which is, it's mind-boggling to think how far they've come in such a short period of time.
Right. And what about kind of comparing that to the current day? Like what would you say it is? What is it like being a founder in Bangkok today?
Now, I would say it, first of all, given just everything the way it is right now, people are a lot more aware. People are more understanding of what a startup is and what it entails, how much investment it takes to make it and to grow it and scale it. There's been success stories. There's been a lot of bust as well. A lot of corporations that are family owned or family run. Some of the largest corporations in the country have set up their own CVCs or venture arms to support these kind of companies as well, either for their own strategic purposes or just for helping foster the ecosystem. VCs are also looking a lot more in the country. You have a lot more people who've essentially localized, even though they're foreigners, they've lived here long enough to just sort of blend in with the culture and view themselves as Thai now, and they're starting a lot more companies as well. The younger generations have also looked at it as an actual career path as opposed to something that was a risk before. Back then, your goal when you came out of university was to get a job at a reputable company and just stay there till you retire. Not anymore. Now, it's actually a very common thing to go join a startup and work for a startup, actually use it as a stepping stone to scale and grow very, very quickly. And a lot of young entrepreneurs from college and universities are starting to go down that path as well. In fact, universities are also a lot more supportive of this, bringing in entrepreneurs as guest lecturers, bringing in companies that have exited to speak about the opportunities in the startup ecosystem instead of just going down the regular career path. I think this is actually what triggered a lot of CVCs to set up their own VC arm and CVC arm because they're able to grab up a lot of these entrepreneurs very, very early and very, very quickly to join their companies under the guise of a VC as opposed to, come get a job with us.
Right. And what would you say is the main difference between, because I think for probably a lot of our listeners, they don't probably fully understand what like corporate venture capital is versus like a normal traditional startup investor that would be like just a normal VC. What would you say the main difference is working with them versus working with a VC?
Yeah, so VC is essentially the structure of it is very simple, right? You get money from private equity, you get money from limited partners, you get money from friends and families. You pool all the money together and you start investing that into startups with hopes for higher returns than you can get in the regular market. So VCs tend to expect 5 to 10x on their capital within a certain number of time frame compared to the market return rate. CVCs, on the other hand, are corporates that are already very profitable. They have a lot of money already. They already have existing businesses, and what they would try to do is set up a side arm, essentially, allocate a pool of money to invest in startups or to invest in new ideas. Most of the time for strategic purposes to help them with their core businesses. So you have a lot of banks doing that. You've got a lot of retail companies doing that, manufacturing, whatever. It doesn't matter what the industry they're in. And those are the CVCs that are actually really try to set up. And most of the purpose is, again, like for strategically trying to grow their own businesses. There's a lot of it could cause conflict as well because most of the time CVCs are not really expecting a return on their investment. They want to learn more about new technologies to fast track the way their companies grow. It sort of happens with scale, right? The bigger you are, the slower you move just by design because you have more layers to go through and you have more just internal politics as well, right? To be very straight about it. CVCs generally sit on a silo and they work, reporting straight to the management level of the corporations, and they're able to experiment a lot more. So a lot of corporates set up these CVCs as side arms, standalone, very nimble, small teams to be able to make quick decisions, all in the purpose of helping the mothership understand new technologies and new opportunities better.
Yeah, we are literally just in that like first innings in Cambodia on CVCs starting to like play a role, but it's only a handful as of now.
Yeah.
Yeah.
It's a risk as well taking money from a CVC. It sounds great because a lot of the time, like you get offered not just the money, you get offered a working space within the corporation as well. You'll get offered resources. You're talking about HR, finance, marketing, whatever centralized resources they have. You also get offered guidance and potentially even access to the pool of customers that a lot of these corporations have if you're part of their CVCs. But the flip side of it is always that because their incentives are not to build to, they're not incentives are not monetary, it's strategic. They most likely want a board seat or they'll take quite favorable terms for them under the guise of like we are a publicly listed company, we need to have these checks and balances in place, and it makes it very difficult for a lot of entrepreneurs to wiggle around further rounds of fundraising or even potential exits if they're not negotiated properly in the beginning. So it's just something to be aware of when working with CVCs.
Yeah, that's a really interesting point too, thinking about it, because especially the flex on resources that are available, even on say the developer side for tech too. A lot of businesses can see that as a very high value for them to accelerate the growth of their tech product, for example. So we, as Max had said, that we are in the early stages of that in Cambodia. So it's good to have a framework around that, especially as it's more mature in Thailand. And kind of going back to your journey, and I guess we could say serial entrepreneurship more or less, but you have co-founded quite a few companies during your career so far, and it'd be great to get a brief overview of each of them leading up to where you are today with Eazy.
Yeah, for sure. So, going back to the first company, it was an e-commerce company back in 2012. We got funded by Ardent Capital, $50,000 for 50% of the company. That money went away really, really quickly. Again, it was the first time I started a company. You don't really realize how fast $50,000 can go out the window. Hiring a couple of developers, hiring a marketing team, a BD team, 3 months worth of salaries and it's already gone. I got diluted down very, very quickly to say the least. But it was a great learning experience for me because I was learning from one of the top incubators in Asia, in Southeast Asia at the time, Ardent Capital, and they had started companies like Ensogo, AtMax, A-commerce, and a few other notable ones as well. Delivery was one of their incubated companies as well. So it was a learning opportunity for me. Let's just put it that way. We scaled that company fairly quickly I was the co-founder and the CEO of the country, Thailand. We merged with a couple of companies. We expanded from pet products to baby products to health vitamins and supplements. Eventually, that company became called Orami. We merged with a company in Indonesia called Bilna, raised almost $20 million in funding, and was valued at $60-70 million at one point. It was one of the largest fundraising in Southeast Asia at that time, actually, in 2016. By which point, we'd had almost 10 chefs in the kitchen, let's just put it that way, through all the mergers and acquisitions that we had done, plus the board of directors, plus other management that we got on board. And it was the company was moving in a direction that was more of a general consensus than under the vision of a single leader. And it's not always a good thing when you go down that route. General consensus is not always the best, especially when you have many, many strong heads trying to fight for the loudest voice. So by that time, I said, you know what? I don't think this is the right place for me to be anymore. I've done as much as I can here. I've learned as much as I can. I'm just going to go out and do this on my own. So I left Orami and I went to start Frank. And Frank was still e-commerce, but I just wanted to sell a different category of products that didn't have anything to do with my previous company. So I was like, okay, I don't want to touch retail. I don't want to touch physical goods even. Let's look at financial products or some other category of products that I could sell online that I'd have to deal with inventory, warehousing, and logistics. And insurance, just by chance, I met with someone who said, hey, have you looked at insurance before? It's a massive market. People are starting to look at it, and it's completely underserved online. Everyone is just still buying through agents and brokers. There's literally nothing you can do online for insurance. I said, okay, let's take a look at it. And it turned out to be great. And by going down that direction, we were able to get our seed funding from, Pacific Century Group and Noah founders out of Hong Kong. And we started Frank, scaled it very, very quickly. Within 4 years, we were doing almost $15 million of sales in a year just in Thailand alone. We had our offices in Hong Kong, in Taiwan. So we were starting to scale, regionally as well. And 2020 came about, and we got an exit opportunity to Boltech, which at that time was just a what do you call side arm of FWD, the insurance company. It wasn't even called Boltech yet, and they said, "Look, we want to acquire you at 100% because Pacific Century Group actually owns FWD as well." So there was already that connection there, and they said, FWD should buy you guys out. We wanted to do something in the digital space, and we said, "Okay, let's do it." So we exited a Boltech, and it was great for the first year. We scaled very, very quickly under their branding as well, and by the second year, the environment became a little bit more corporate, and I said, okay, it's past the golden handcuff period as well, which is also another trigger point for me. Golden handcuffs are, when you have to stay in to lock in your equity with the new company as well as get your full exit and everything else like that. So I was like, okay, it's a good opportunity to leave 2 years down the road. Let's go back to my entrepreneurial roots and start Eazy Digital. And even Eazy Digital started off by chance, because when I left Boltech, as I was telling you guys earlier, I was consulting for a couple of companies. They wanted to hire me full time. I said, no, I don't want to get hired. I don't want to do a job. Hire me as a consultant, and I'll start, just presenting you some value first before I say yes to any potential job offers. So I had 4 or 5 consulting contracts at the time. Started seeing a very common trend of what problems and what pain points they all were having, and decided to go build the product to solve those pain points myself. Yeah, and this is where we are now.
It's so funny, like listening to you talk about your journey and each of the steps of getting together with a co-founder, getting product market fit, scaling, moving on to an exit, and then just rinse and repeat. When you talk about it, it sounds so natural, and it's like really refreshing to hear that. It's like, wow, just sitting here being able to listen to that, it's really motivating, and I'm sure for a lot of other entrepreneurs too. It's a process that you can put in place, and one of those pieces that I'm curious about is around co-founders and how you were able to find good people to start a company with.
It sounds easy and natural for sure, but especially when I'm, painting an overview, 30,000 feet picture. But realistically, throughout the years, through every iteration, there was a lot of pain involved in the way. Like even, starting from the beginning in my first company, I gave away 50% of my company for $50,000. Very quickly, I got diluted away as I needed more money to run the company. Within the first 6 months of running that company, the Ardent Capital actually wanted to let me go and just take the idea and actually say, you know what, I don't think you're suited to be a CEO of a company. You have no idea what you're doing. You don't have any experience at all. And they actually already fired me. So they gave me the notice already. They sat me down in a board meeting and told me that. And I said, you know what? Like I literally tears down my eyes. I walked home that day and I was like, struggling very, very badly, very, very deeply. But I took I think 24 hours, and the next day I went back to the office, which already was a shock to everyone. They're like, "Why are you doing it back in the office? We just told you to be on your garden leave for the next month, and bye bye." I said, "You told me I don't have experience. What if I offered you this? What if I offered to work for you under your guidance, cut my salary in half, take all my equity and put it on hold, everything, and I'll work for you for 3 months under you to learn everything from you. And if I can do it, then you can reinstate everything else. If I can't, then you have nothing to lose. You just got an employee for half the price with no equity, with no equity anyways. Are you okay with that?" They said, "Let me think about it." 2 days later, they called me. They're like, "Look, we've fired tons of people in our life. We've never had anyone come back with an approach like this before. We'll take the offer." And it worked. 4 or 5 months down the line, they reinstated me as CEO of the company, gave me all my equity back, gave me everything back. I learned everything internally. I learned from a mentor, essentially, Tom, who is the CEO of e-commerce right now. And yeah, he taught me what to do, what not to do, and I learned from him what was important and what I needed to focus on. So it's not always smooth. And even with Easy Digital, when I was doing consulting for a lot of the insurance companies, I already had an idea that I wanted to pitch to them. Because I always knew I wanted to get back into some building something and doing something on my own. Consulting was always a short-term cash flow solving problem. So my idea was to make every customer an agent without having to go through the licensing or requirements of getting a license by using a referral methodology. So if you technically get a customer to refer another customer, you could still get the same effects of an agent, almost like an MLM methodology, and it works in small scale. But I was starting to pitch it to clients already, and I was already starting to build pitch decks, build material to go fundraising on that idea. Very quickly, I hit into roadblocks with legal teams of insurance companies starting to say, look, it works great in small scale. We get your model. There's nothing illegal about it, but it's gray. It's too gray for us to be comfortable with as a large scale insurance company, because the moment you get to a threshold of, like, let's say getting 10,000 people recommending another 20,000 people to you on a monthly basis, the regulatory body is going to come knocking and saying, why aren't these guys licensed? We are paying them commission technically. And we can tell them we're paying them a marketing fee or whatever, but it's never going to sit right with them. So you need to figure out another way to make this work, or we're not going to do this with you guys. So it's like, okay, great, that's not going to work. Let's pivot the product a little bit and like see what else would work instead. So it's smooth until at a high level picture. Like, heck, like if you zoom out far enough from Earth, the Earth looks smooth. You know what I mean? But when you're living down here, you see bumps and mountains and crevices and trenches all over the place. So everything looks smooth from a super high level.
Yeah, I love that. I love that idea of if you zoom out from far enough from the Earth, everything looks smooth. And I also love the underlying idea that you bet on yourself and consistently going from stage to stage, in despite of whether it's the challenges you faced or the successes that you had. It's always that consistency of, you're staying true to yourself. You're going to bet on yourself, and you're going to learn no matter what. And that's really what we've learned is are very important characteristics of strong founders too. And so, just to fast forward to Easy Digital, it'd be great to just talk a little bit about, for the audience first, just a brief overview of what Easy Digital does, and then what the journey's been like so far since starting in 2022.
Yeah, so right now our model is we're an agency management platform for insurance companies. So when I was trying to pitch these insurance guys, essentially ways to earn more money by leveraging referral networks and MLM type trees to get their customers to recommend other customers. Management team and the CEOs of a lot of these companies thought it was a great idea, but every time after the conversation would end, I would see them revert back to solving traditional and really basic problems that they were having internally. And a lot of that circled around agency and brokerage management. It was their bread and butter. 60-70% of the insurance company's sales come from agents and brokers, and a lot of them are still very manually being handled. And when you say manually handled, I'm talking about, issuing quotations, understanding their requests on a daily basis, statement management, dashboarding, promotions and campaigns, media sharing, onboarding, training, commission calculations. All of these functionalities are being done by tens and hundreds of peoples within the insurance organization, where the majority of the resources are being spent and still being done very manually in a manual way. So our goal right now at Easy Digital is to solve that problem by providing a platform and a solution for the insurance companies to use with the agents to not just manage the operations, but help improve agents' efficiency so they can increase their sales. And it's by no means anything new. If you look at large insurance companies like AIA, who've built, their Vitality platform and other platforms like their IMO platform, the interactive mobile office for their agents to access a lot of these tools, those are large-scale companies at a global level who've had these technologies built in a regional center and shared across multiple countries where they can share the cost. They've spent tens of millions of dollars doing that. Unfortunately, most other insurance companies in the market don't actually have the budgets or the resources to build these kind of platforms, nor should they, because they're not technology builders. They're not going to go out and build their own CRM. They're not going to go out and build their own core systems even. What makes them think they can go out and build their own agency management systems to build, to work in a cohesive way? It took AIA almost 10 years to do that, with tens of millions of dollars spent regionally to get to 3-4 platforms that the agents have to log in at the same time to use all the functionalities in a non-cohesive way, because everything is built, bit by bit, piece by piece. So we're taking learnings from that, and we're building this into one cohesive platform, packaging it up as a SaaS, and selling it to the insurance companies to use very, very quickly to help improve their agency sales. Doing this, it took time to get to this model. It took time to get to the product as well. But I sort of realized very, very quickly, it's like, I'm actually building a tool I wish the insurance companies had given me when I was an agent and broker, selling products for them. At Frank and Boltec, we were selling, 15, 20 different insurance companies' products, and we were handling a lot of these operations by building short-term solutions and fixes ourselves, because these solutions were not provided to us by them. And we were considered technologically advanced broker. Again, most brokers are not technologically advanced. They don't have the resources to build their own platforms. Most agents don't have resources to even open a website of their own. Forget about it, like, anything else, or even spending any marketing dollars. So it's something that they definitely need, especially if we cannot negate this channel, right? It is the largest channel and has been the largest channel historically. Even with the rise of direct-to-consumer and digitization, insurance agents and brokers still hold a majority of the bucket for any insurance companies around the world. You're talking about Europe, you're talking about Asia, you're talking about US, still the same story. And they're well more advanced than we are in Asia, still being sold to agents and brokers. So it's not a channel we can negate. So why bother ignoring it? Why not just make it a lot more efficient, make it a lot more user-friendly through a platform? That's the idea, and that's what we do at Eazy Digital.
Thank you for that very detailed explanation. How many sort of companies like this would you say exist in Southeast Asia that you would be targeting to sell this digital solution to?
So far, what I've seen is, most of the time when I go an RFP, a request for a proposal or a request for a quotation from an insurance company, but these kind of platforms, I tend to go up against Salesforce. I go up against custom built solutions where they already have the idea of what they want, and they sort of go out and find a developer outside to build these platforms. So those are like the two biggest competition, you could say, that I go up against. It's a very difficult proposition for me to get explaining to a lot of the insurance companies as well, that you don't have to go out and build these solutions yourself. You can use a ready-built solution. It might not solve 100% of your problems. It'll solve about 89%, but that's already the majority of what you need solved in order to get working. If you're trying to solve 100%, you're not going to get up anywhere. And also, when you're using a digital solution, it's okay to change your processes along with the platform as well, as opposed to build platforms around existing manual processes. A lot of insurance companies tend to do that. They look at the current process that they have, and they get a developer outside or a custom dev house to build solutions to streamline those processes, without actually realizing those processes were built because they're manual in that certain way. When you're moving to a digital way, you don't have to follow those same steps. You can bypass a lot of those steps. You can change that completely around. And that's the struggle, to be very honest. Again, it's also B2B sales. That's another struggle as well. Even if they like the platform, even if they like the idea, the decision to implement a new platform for an insurance company takes a lot of time. We see deal cycles of almost 6 to 8 months. But luckily, the deal cycles are large. The deal volumes are large. So when we get a contract, it's like a 7-year-long contract, 8-year-long contract.
And how has the thinking around the price point evolved through time? Like, what would be the kind of annual fee that an insurance company would be looking to pay for a solution like this? And are you going to shift to some different models there, or is it going to stay as sort of one specific price?
Well, I think it'll be crazy if I don't keep shifting, right? I'm still learning as
Yeah.
well. I'm only 1 year into this journey, to be really, really realistic. March 2023 was when I onboarded the CTO. Before that was just me and my co-founder managing outsourced developers on ad hoc basis. We didn't even have an office. We were running, working from home and just meeting in a coffee shop once or twice a week to run everything. So yeah, it's an ever-changing process. The way we charge right now is though we charge by functionality as opposed to by number of agents onboarded. So we want to make it as clean, as simple as possible, as flat fee as possible, so that they see the value in expanding this and rolling this out to as many agents as possible. And that's the way we plan to start. We don't plan to shift to by agents anytime soon. I want this to be in the hands of as many agents as possible and give more functionality and then charge more for the functionality given.
Great. And what is what does the roadmap look like for 2024? What are some of the goals, milestones that you want to achieve, and also in the context of your recent fundraising round in 2023 that maybe you can touch on?
Yeah, it always has to go around the fundraise as well, right? We don't want to be one of those companies that keep raising funding and keep burning a lot of money as well. As a tech platform, the way I look at it, I want to be similar to what WhatsApp was, 50 people employee company, and they were able to exit for multiple billions of dollars. That was like an ideal case for me. The way I look at it is as a tech platform provider, I need to focus on the core platform. I need to build up this platform as quickly and as robustly as possible, where it's scalable, where I can launch it in multiple countries, configurable for, system integrators to work with as well. And that means I have to spend a lot of my time and resources building the dev team. Having said that, dev teams do cost a lot of money. But if you get the baseline of clients there in place, you can become profitable also very, very quickly, especially if you keep your baseline fairly lean. So our goal for this year actually is to make sure that we can reach near profitability towards the end of the year, and be present in at least 2 countries within the end of this year. And that's already a big ask considering we started the company last year, but at least it'll prove to investors one thing, that one, where our platform and our company can be profitable very quickly. 2, we're a scalable platform where we can roll it out across multiple countries. And next year, our goal would actually be to venture beyond insurance and to showcase that this is an agency management platform. Theoretically, it can work for any business that has agents selling on the ground who needs the following functionalities, who needs the same types of feature set. Ignoring the product line, it should be the way it is. And that's what we're trying to aim to, do in 2025 as well. So it really makes this company valuable, not just from the investor perspective, but also from an exit opportunity perspective, where a lot of SaaS companies or a lot of large scale let's just say service providers are looking to engage with multiple clients and multiple large scale clients in multiple industries would want to acquire a company like ours.